Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee about real investment opportunities. Today we're diving deep into Energy Transfer LP, ticker ET, one of the biggest names in the midstream energy space with a massive pipeline network stretching across the country. Energy Transfer has been making waves lately with strong operational momentum, boosted distribution payouts, and growing tailwinds from data centers and LNG exports that could keep cash flows humming for years. The company operates roughly 140,000 miles of pipelines handling natural gas, NGLs, crude oil, and refined products. It's a fee-based business model that generates stable revenue regardless of commodity price swings, which is a huge plus in the volatile energy sector. With about 16,000 employees and headquarters in Dallas, ET has grown into one of the most diversified midstream players out there, moving everything from raw production to end markets. Looking at the revenue breakdown, the latest full year showed oil and gas at around $25 billion, NGL sales near $19 billion, natural gas midstream contributing over $12 billion, and other segments like refining and marketing adding another $22 billion. This mix gives them broad exposure across the energy value chain and helps smooth out any single area weakness. On the earnings front, ET just posted a solid quarter with record volumes across NGL, crude, and refined products pipelines. Adjusted EBITDA came in strong, beating estimates, and distributable cash flow supported another distribution hike to 33.75 cents per unit, marking more than 3% growth year over year. Management raised full-year guidance, pointing to continued momentum from contracted volumes and operational efficiency. In the earnings discussion, leadership highlighted how 90% fee-based EBITDA provides downside protection, while new growth projects tied to power demand and exports are ramping up. They emphasized long-term contracts averaging 18 years on key pipelines, which locks in visibility on transportation fees exceeding $25 billion. The tone was constructive, with focus on executing the capital program and returning capital to unit holders through distribution growth. From the balance sheet perspective, total assets sit around $141 billion, with manageable leverage relative to the asset base. Operating cash flow remains robust at over $11 billion annually in recent periods, easily covering capex and leaving free cash flow for distributions and debt management. Net profit margins hover near 5 to 6%. Typical for the midstream sector, but supported by scale and diversification. On valuation, ET trades at a forward multiple in the low teens, which looks reasonable given the growth outlook and 6.75% distribution yield. The enterprise value to EBITDA multiple remains attractive compared to peers when you factor in the contracted cash flow stability and expansion projects. Strengths include record EBITDA levels, a vast infrastructure moat, and exposure to secular demand from AI-driven power needs. Weaknesses center on high debt levels that require careful management. Opportunities lie in LNG exports and data center power connections, while threats include regulatory hurdles and competition for new projects. Overall, the SWOT tilts positive for long-term holders who value income and modest growth. Recent performance shows the stock up over 8% in the past month and 14% over 3 months, outpacing broader energy indices in the short term. The one-year return sits slightly negative, but the 5-year picture is strong, with total gains above 150%, rewarding patient investors who stayed through the volatility. For intrinsic value, a discounted cash flow approach using conservative assumptions points to a fair value well above current levels. The model delivers a DCF estimate around 31.58 per unit compared to the market price near 20, suggesting meaningful upside if growth targets are hit and the distribution keeps compounding.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.